Yo, what's up? Wednesday, Feb 26th. Got some bad stuff going on. I turned bearish at I guess it was at the beginning of this year. I've been talking to you guys about fiscal flows. That's the core of my analysis. That's the core of MMT. And I've been telling you recently there were some disturbing trends starting to emerge. Now, something happened yesterday, which we hit that inflection point. And this has to do with the fact that tax flows now are exceeding spending flows. Very bad. So that is a net drain on income, on national income. Now this trend has been in place now for, I would say, since late last year. It has been steadily moving up through January and into this month in February. I've been talking about this. I've been making videos about this. Now nobody is following this. And by the way, I gotta be honest, and it's very, very humorous and it's very funny that in the beginning of the year, and I posted all this stuff up and I sent out emails and it's in my report. I was talking about this yesterday, how I clipped out these headlines all over the internet. Hey, you gotta buy. The worst thing you can possibly do right now is to take profits, right? All these big shots on Wall Street, all the big shots, even Goldman Sachs saying, hey, we can never have a recession again. Now, last year, if you've been following me long enough, you know that last year I said I ruled out recession completely when everybody was screaming, hey, it's going to happen because of the trade war. It's going to happen because of the inverted yield curve. It's going to happen, I don't know, because of the Fed and the liquidity crisis or all that stuff. I said, it's not going to happen because we had record levels of fiscal support. So why did I change? Because, when the data changes, when the reality changes, you got to change. And the reality is that what I've been saying, tax flows have been accelerating, spending flows have been, rather stagnant. They've been going up, but not at the rate of tax flows, and we hit that inflection point. It flipped around. And this is what it's all about. And I also made the prediction early this year when everybody else was saying, oh, the deficit's going to be over $1 trillion. No, it's not going to happen. The deficit is going to shrink this year. That's another thing. You can come back here in September, at the end of September, when they report the deficit for the full year, and they're going to say, gee, the deficit shrunk. Yeah, well, you heard it here first. Now, why is all this important? Because again, this is at the core of the economic analysis. This is, that money pump. That's the government. That's, the spending. That is what flows into the economy as income, as investment. Now it's flowing back out. These are the tides coming in, coming out. Now, we have had, since 2009, all right, going back 11 years, a positive fiscal pump. That means every year, not just more spending every year, but spending in excess of taxation. That differential got wider and wider and wider. Last year it really peaked out. And now, you hit a point where, and this is funny because this kind of goes to the whole, these wacko supply siders, these guys like Art Laffer and all these guys who say, hey man, you just cut taxes and this is supply side, then the economy booms and the deficit actually shrinks. This is actually what's going on. These guys are onto something, but the problem is when the deficit starts to shrink, that's when you're taking assets away from the actual economy, all right? They're flowing back in the direction of the government's coffers. So they're not going anywhere. They're basically going into a black hole. They disappear. So really what you have to do, what policymakers have to do in a situation like right now, is you got to either cut taxes or you have to increase spending. Now, none of that's going to happen. Now, we're in an election year. Congress is not going to move on that. And by the way, everybody's up in arms about the deficit anyway. I would not be surprised, no matter who gets elected in November, you're going to see the whole entire philosophy on this flip around, where the mantra is going to be deficit reduction. So this thing could go on and on. Anyway, so this creates an environment. Remember, I always say it's all about basic conditions. And something like this creates the very conditions that will dictate how the economy looks now and going forward. So once you know what basic conditions are going to look like, I mean, it becomes just an academic exercise to put together a strategy. Now, our strategy now is we're selling rallies. I mean, the market opened, 300-400 points higher this morning. I sent out an email to all my subscribers, sell into this rally. Sell into this rally. And at least as of this recording right now, as of this video, I mean, we're down, we're negative. It lost everything. It lost everything that it had today. So yeah, I mean, that's where we are right now. And this is not your, garden variety correction. This is not a correction like the ones we saw last year, which were just market corrections from overbought conditions. And maybe headline reactions, all right? The trade war, Trump said something, he tweeted something, I don't know. Or, the inverted yield curve, which at that time last year was completely and entirely based on the debt ceiling, which I explained at the time, right? It created a shortage of Treasury securities, and they got bid up, so yields came way down, and yields came down below the Fed funds rate, and so you had an inversion there. So that was a technical situation. Once the debt ceiling was raised, that thing went back to normal. But now we have a completely different scenario. So everything has changed. Everything has changed. You need to know what's going on. You need to understand policy, and the only way you can understand the effect of policy is through an understanding of MMT. Again, I'll repeat it for the umpteenth time. I'm the only one out there who has an applied approach to MMT. Nobody else does this. Nobody else does this. You got academics, they're talking about, in fact, even the academics, they only take it so far. There's a lot they don't understand. So I mean, they're kind of useless in a sense. I mean, if you want to learn to a certain level about MMT in a general sense, yeah, but don't you want to make money with it? I mean, isn't that what it's all about? So it's great to have an academic exercise and to listen to them talk or read their papers, but I mean, you want to be able to take that information and apply it. Apply it so that you could use it to invest and trade in the markets. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. And I gotta tell you about this one. I had a guy today sends me an email saying, Mike, can I cancel your subscription because your reports are just coming in and clogging up my inbox. Clogging up his inbox like it's like spam or junk mail, okay? Meanwhile, this guy, he was one of the original guys. He's on a very, very low subscription rate. I got people signing up now at $395 a month, which that's still cheap. This guy had it at, I think, $75 or $100 a month. Clogging up his inbox like it was some spam or junk mail, right? Meanwhile, he's tweeting out almost on a daily basis data and analysis and stuff that is almost verbatim in my report, okay? So I mean, guys, excuse me, but don't bullshit, all right? And have a little respect. I bust my ass putting this stuff together. Nobody else does this stuff. Please, if you want to cancel, that's cool. Just say, hey, I want to cancel. Don't say to me it's clogging up your inbox. I mean, seriously? Are you kidding me, man? You know the work and the time and the thought that goes into this stuff? I mean, that is just like unbelievable. I don't expect everybody to like me. I know a lot of people out there probably don't. But I mean, have a little respect. There's a lot that goes into this. Don't tell me it's clogging up your inbox. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader now. Price is just going to keep going up. There's people signing up at $395. I told you, price is going up to $1,250 a month eventually. It goes in increments, but you got to get it now. I mean, you make that in a day, basically, based on, I mean, what we did today. I'm sure a lot of people made 5 years worth of subscriptions just today. All right, have a great day, everybody. See you tomorrow. Bye-bye.